And we are rolling. And good afternoon, good Friday to you, Pete. We've had the opportunity to get together at the end of this week, which has been anything but mundane in the metals. We have been rocking and rolling, and we're going to try to bring our people up to speed very quickly. I know you just finished a quick historical overview of what's been going on here. If you could give us a quick summation as to the significance and the levels. For example, you and I were just discussing the fact that we're seeing silver once again over $18 and very strong all day, and a real interesting week with pressure from both sides. 1 minute we're getting hit by a missile, the next minute, we're invading, and MSNBC comes out and goes, "Oh, sorry, nobody was killed. The 30 people we reported as being dead haven't been heard," and it's been just crazy,
Yeah, quite a bit of volatility in the markets for sure. I think one of the key takeaways for the week, though, is that despite a pretty significant reversal day, in the wake of the Iranian attack on
right.
U.S. positions in Iraq, it didn't really sell off that far, and it's come back fairly significantly. So basically got down below the 9-day moving average. And popped right back up.
Yeah.
So we are going to close lower on the week, but only slightly so.
Yeah, almost insignificant. Yeah. I mean, but the thing is, I think as we discussed, I think it's the strength to hold these levels that it attained, the $18. I think the other significant thing is 1550, big psychological number in gold.
Right.
We're back above that again, even though it had dipped down and was feeling pressure. But I would say that those numbers are very, very significant going into next week. And then, of course, our friend Platinum, who has been laying in the $700 and $800 range for the last 3 years, Peter?
Yeah. So we're looking really good. Traded back above 1,000.
Right.
It's the first time that's happened in a year. But more significantly, we're kind of at 3-year highs in platinum right now.
Right.
Market's looking really strong. Moving, perhaps finally in sympathy with the palladium market.
Right.
And rhodium as well.
Oh, yeah.
And I think that those are the markets really to talk about this week, because it's stunning what's going on.
We can't touch on the explosion in rhodium without at least being in the PGM area. As most of our viewers know, catalytic converters are very, very significant. You use rhodium in the formation of a lot of these. You're running at extremely high temperatures to create some of these catalytic converters, 3,550 degrees Celsius, Fahrenheit rather. So rhodium is in demand. I think while we're looking at this 7,700 low, 8,700 high in palladium, which just think about that. Because
in rhodium.
Yeah, in rhodium, because not long ago I was buying rhodium at 3,000, and so very, very significant move here. But I think the thing and we keep getting people, how come, why is this happening? I think what's happening is we're seeing the impact of the Green Bill, of the Green Initiative in China. Chinese Communist Party voted that they were no longer going to allow vehicles not to have catalytic converters. They decided that you can breathe the air without seeing it, which is kind of a new concept over there. And so
I'll tell you just a quick anecdote, Pete, about that.
Yeah.
We were in China 2 years ago.
Right. I remember when you went, right.
The smog was unbelievable.
And it's better. It's better now. Yeah.
Yeah, they have trucks driving around that mist. So they spray mist into the air to try and knock the smog down.
Right.
But I think they're on the right path. You can't have that many vehicles, and the number of automobiles is growing
exponentially,
leaps and bounds,
right,
in China, and you can't be running them without catalytic converters, without having very serious air quality and health implications.
Sure, and as we know, when the Chinese say, "Oh, we passed the law and you're going to do it," it isn't like it's ignored. You know, they have these things called re-education camps, which are. It's not like
Right,
going to the Holiday Inn. You know, there's,
right.
so people take the laws very seriously there, and the old thing of where a guy would get a truck and the first thing he'd do would be saw the muffler off so he could increase the gas mileage, and to hell with the catalytic converter. And then instead of running a regular high grade diesel, they'd run a lower grade diesel. So you get that beautiful blue plume coming off
It's
the exhaust.
it's lovely.
Oh, yeah.
Yeah.
So,
So palladium, the highest I saw today was like 25.33.
yes.
It becomes.
I actually thought we were going to see 2600. It ran up to 86 early on, tested it, and then fell back.
Yeah, so
So
get this. So it was up about 8%, almost 9% intraday at one point.
right. Yeah.
Today is the 20th consecutive higher close.
Oh man, I didn't know that. That's amazing.
So 20 days in a row.
Okay.
We've seen initial and maintenance margin in the futures market widen out substantially. I think maintenance margin is at like $13,500,
Which is going to change shortly.
yeah, which is, I mean, I think it's going to go even higher.
Oh yeah,
We've seen
absolutely.
spreads blow out across the industry.
That's well
We've
put.
seen a lot of dealers, take their bid ask down entirely because, quite honestly, you can say I saw a 25-30 quote,
Right.
but nobody really knows where the market is right now.
And I'm very glad you brought that up. Let's let our viewers think about this for a second. Just because you have a price posted there doesn't mean that's where it's trading. When you have radical movement in markets, what we're always pounding home to you is you buy gold on dips and you hold it. And because when you get radical markets like you're getting in rhodium right now, you can't buy it. It's not available. Or
Right.
you want to sell it, and dealers are going, oh, okay, I'll take it with a $300 discount because I don't know where the heck it's going to be in an hour.
Yeah, that's exactly right.
So the thing is that these are not scalping markets, shall we say. These are markets which you take positions on as they're developing versus chasing them. You don't want to chase a runaway bull with 20 new highs in 3 weeks. It's crazy. So I just wanted to point out, and here's another thing. A number of the major markets that are bankers that have gold trading rooms, such as ours, are closing down. They're just saying we are not interested in making markets in rhodium anymore, and so until they reopen.
Is that both rhodium and palladium?
It was both.
I know it was palladium, like
Yeah.
some of the major liquidity providers have pulled
Absolutely.
out.
The rhodium guys, we're fortunate enough to have, I believe the largest rhodium trader in America with us, and he told me people were calling him all day, offering him product, and so we were seeing not a little, a lot of profit taking today.
Can you share, like, I mean, was he taking these offers?
We saw some big offers come in, and yeah, he was taking them, but the spreads were wide because
relative to what?
Yeah, right, exactly.
Who
Well,
knows?
I mean, this you have to hand it to him for stepping up. I mean, there's a lot of exposure there, and it could either be at 10,000 or 5,000 any day now. So
Right.
you buy a bushel basket full of ingots right now, you're biting off a lot. So
Yeah, that's a fact.
so kind of a hats off to that, and just wild, demand-driven market, and like you were pointing out, higher highs and just tremendous velocity on these markets. So
Yeah, I was noticing that there are some people, they're asking like, well, where's the top?
yes,
And I'm like, I care more about where the market is right now because nobody seems to know. I'm not inclined to try and call it top. I think it's a fool's errand in a market
Right.
like this. But more importantly, I think the fundamentals are still supportive to this market. Maybe not at these levels, but I think if the market does pull back, that it's a correction, and I think the bids will come back in.
I like the terminology. Yeah.
I don't know where that's going to be, quite honestly.
Well, and if you knew exactly where the market was going to be, you'd be sitting on your island with a drink with a little parasol in it right now. So let's be real about that. We're not doing any price projecting here or recommendations, but what you're saying is true. I think demand driven is you hit it right on the head.
Yeah, I think the market is in deficit. Supply deficit. It's been for a number of years now, and it's going to continue to be, particularly if Chinese demand remains high. One other quick thing that we should but touch on before this gets too long. Because I could talk to about palladium and rhodium with you all day long, but is a substitution.
Yes. Yeah.
So the spread is huge.
Oh,
and
yeah.
Why are we not seeing the platinum substitution?
Well, it's interesting. When I talk to manufacturers, I know a lot of the people that do the cathode creation for, let's say, where would people relate to that? Spark plugs. The little node on the bottom of the spark plug that the electrical current comes through and sparks and ignites your gas or diesel. Those are platinum. And they for a while when palladium was exceedingly cheap, they were using palladium. They've switched over a couple of years back when platinum got so cheap, and a lot more platinum cathodes are being used. So how long are we going to see that? I think it's going to stay that way for a while. I don't see them flipping. I think people are going to be staying as much as they can into platinum, and I don't think that's going to change.
Gotcha.
Yeah.
Gotcha. But kind of the bigger picture with regards to primarily catalytic converters. What do you think is going on there in not seeing the substitution? Because sort of historically, when the spreads get like $500 wide or so.
Yeah.
I know from previous discussions with you typically would anticipate substitution.
Well, I think what let's give our people a broader brush here and say this. If you took all of the rhodium, platinum, and palladium, you could probably fit it in my basement. There's just not that much around. We're talking about very small markets that has in the last 3 or 4 years has been thriving on recycling. We're seeing an excellent job being done by the scrappers, bringing in the catalytic converters from junk cars and recycling that, and that has taken a lot of pressure off of the market. But this new monster referred to as China is coming in here going, we'll take whatever you got, whether it's rhodium, platinum, or palladium, it doesn't matter. We'll take your nobles, we'll take your PGM, whatever you happen to have, we want it. So as you're saying, it is demand driven, and it's demand driven across the board because they need everything.
Right. I would even go so far as to say that it's both demand and supply driven. At least in palladium, certainly in palladium, not so much in platinum, because platinum market remains in surplus, but certainly in palladium. So you have this huge demand. You have a supply deficit. And
which has been going on for almost 3 years.
And so I think back to my econ class, and I go, high demand, low supply,
higher prices.
Exactly.
Boy, we're so lucky to have you,
Dr. Ranson.
Yes,
would have been proud of me for figuring
I'm sure
out.
of it. Absolutely. Well, listen, those of you who follow me on Bloomberg or some of the other publications that we do, our Twitter address is what, Pete?
Yours is Metals Zaner. Mine is Grant on Gold.
Beautiful. So we try to bring you up to date during the day as to what's going on 2 or 3 times a day. Well, also we have our Facebook, which is what?
It is Zaner Precious Metals. And then
Okay.
we also have a group about risk management in metals. So
Right.
precious metals risk management
So,
group on
so,
Facebook.
so you have, with those, you have access to what's going on in the metals. And boy, we really appreciate you taking time to visit with us today.
Hey, my pleasure, Pete. You have a great weekend.
All right. Take care now.